Hi, I've been making a series of videos recently pointing out how the markets might finally be going into a really deep pullback or correction. And I'll link the videos I made. I made two videos recently, one on S&P 500 using the ETF called SPY, and then I made another video on QQQ, which represents NASDAQ yesterday. So I'll link those videos in the description below. Take a look. And today I want to cover Dow Jones using an ETF called DIA. Because I've been pointing out for several months that markets are obviously looking very toppy, but the thing is nobody can predict when markets will go into a correction when that happens. So what I'm hoping for is after this gigantic rally this year, that we get a proper correction, like a 10% correction or more, and not just a small 3, 4, 5% pullback. And for a correction to happen, it has to be a secular pullback across the board. So DIA needs to fall, SPY needs to fall, QQQ needs to fall, IWM needs to fall. So only when this confluence happens will we get a proper correction that I'm hoping for. So let's look at the DIA chart today. And right now I have QQQ pulled up for you. And again, look at the links in the description below where I've pointed out what levels I'm watching for in QQQ and how far it could go down. But let me switch to DIA. So one thing you'll notice with DIA is with QQQ, what happened was it started falling first. Then it was followed by SPY, but Dow Jones has been really resilient so far. And the red and the green lines are called Bollinger Bands, which capture the trading range in an equity. And when these lines get trapped inside the gray lines, which are called Keltner channels, that usually represents an area of sideways movement, low volatility, choppy markets. So if you're a directional trader like me, I usually avoid those trading those stocks because I know I'll keep getting chopped out. But in this case, why I'm watching this area of consolidation is once a stock enters into a sideways price movement with a period of low volatility, low trading range, hardly any movement, after a while it explodes out of that, and that explosion is usually a pretty big move. So before I show you what I'm talking about, let me add an indicator here called TTM squeeze. And all it does is it makes it easy for you to visualize the sideways movement or the squeeze. So in this case, I pointed out that the Bollinger Bands in DIA have entered the Keltner channels, which represents a period of low volatility. So I'm going to switch to a 9-month daily chart for you. Now let's go back and see where else can we find this squeeze situation happening and what happened after that squeeze. Okay, so this is one good instance I can point out. So this is February 6th, probably approximately February 6th is the time when the Bollinger Bands, the red and the green lines, are entering the Keltner channels. And once they do that, you can clearly see the any stock or equity just doesn't go anywhere. Look, it's just chopping around, up, down, up, down, up, down. It's making no price movement. So this is that period of low volatility I was talking about. And when you add the indicator called TTM squeeze, which is at the bottom, you will see that when a stock enters that period, it just starts showing you these red dots. So all that means is there is no price movement happening right now, but it also indicates that get ready for a violent price move soon, sometime soon. Nobody can predict when, but it's showing you just watch out. This stock will break out or equity will break out of this trading range, and will probably have a violent move to the upside or downside. Again, nobody knows which way. So if you notice on around May, also you have some red dots showing here, and markets are kind of choppy, but usually the TTM squeeze is more reliable when you have a series of at least three, I would say, three red dots consecutively showing up. So here it's all kind of choppy, red dot, yellow dot, red dot, yellow dot. So let's ignore that. This is a decent example. So from February 6th all the way to February 20th, DIA went nowhere. On February 21st is when the Bollinger Band started exiting the Keltner channels, also representing an increase in volatility. And this indicator TTM squeeze will start plotting green. It's appearing as yellow, but it's usually green. It will start showing these green dots happening, and whichever way the bars are firing, that is the way it's predicting that the next explosive move is going to happen. And in this case, this is a perfect example. So what you will see is Bollinger Bands exit, TTM squeeze starts showing green dots, and the bars are firing to the downside, and we actually had a correction. So from February 21st all the way down to March 15th, almost a month, or let's say 3 weeks. It's a 3 week long correction that happened, and which was caught perfectly by TTM squeeze. So having said that, now let's go back to the present moment and see what's happening right now. So you can see that we have three dots which represented this sideways movement. When this TTM squeeze is really short, so it started here on August 11th. Okay, but if you notice, as the Bollinger Bands start contracting, it doesn't have to be that only when the Bollinger Bands enter the TTM squeeze is when you have sideways choppy action. You will start seeing signs of that as the Bollinger Bands start kind of contracting and eventually heading towards that squeeze period. So Bollinger Bands are contracting as shown here, and you can see that it's mostly sideways choppy action in DIA. And what I'm seeing is, although if you look at TTM squeeze, it's beginning to show some bars firing to the downside. It hasn't shown any green dots appearing. And so TTM squeeze, like any indicator, does generate false positives. So you just have to be patient with it and let those green dots appear for you to see, for you to get a reliable reading. So right now all I'm seeing is that DIA is still stuck in a sideways move inside a TTM squeeze, low volatility period. So, but I'm watching intently because QQQ and SPY, which I mentioned in my previous videos, have already started falling. They are not stuck in a sideways move. They are actually showing clear signs of downward momentum. And once DIA follows through and it joins them, that's when we get a secular correction. That's when I could expect a proper 10% or more correction. But if Dow Jones just hangs around here, then it's going to be tough, because we could just get a really shallow pullback like 6%, 7%, and the market start rebounding again.